Hey everyone, this is Michael. I haven't done a video for quite some time and wanted to get this out on this weekend. Just kind of give you a general market overview as far as what I'm seeing. I'm going to ignore all the economic events and just kind of go straight to the chart. So what I've got here is I've got the S&P, SPY, and a couple of things on here. You can see I've got the 200 moving average. I have the 20 simple moving average, the red line, and then the blue line is the 50 moving average. I've also thrown the volume on here. And you see I've got the ADX. I use a 13 period on these bigger picture types of analyses. And I'm always looking at particularly the ADX line and where it sits and whether it's over 20 or not. And you can see it very, very faintly that I've got a little line here on 20, so we're not quite there. Anyway, when I do some top-down analysis, I kind of look at where we're at as far as the crossover. And I do like to run crossovers quite a bit and see where we're at. And you can see that we've actually had this crossover here and with the trend down. So when we've got the 20 below the 50, it's in a downtrend. And when both of those moving averages are lined up, also the 200, we're definitely in a downtrend. So we had a crossover here with the 20 below the 50 below the 200, and that was really a strong downtrend for me. So I'm always looking at trends. And what we kind of have right now is we have the 20 that's just about ready to cross back up above the 50, which means that we're potentially in an uptrend again. And maybe it's just going to correct back up to the 200, but we're definitely still below the 200. So we're still technically in a downtrend. Anytime we're below the 200, I believe that we're in at least a moderate downtrend. Strong downtrend when the 20 is below the 50 and the 50 is below the 200. So maybe we've got a reversal coming. Maybe not. Volume has been good. And then the ADX is curling back up and just about over 20. Now, does that mean I want to buy? No, not necessarily. I'm always going to be bullish in the market. So I'm just going to take these off real quick to clean it up a little bit. There we go. And let me just take the volume off as well. And just kind of do some very, very basic trend line analysis and Fib analysis. Okay, so first of all, very clearly, we have had resistance right up in this area. Okay, and let's make that a rectangle. So let's just say that the resistance has been up in this area. So we can expect resistance from that perspective. We also had this downtrend line that got broken. We crossed back above it. Fantastic. Came back down, retested a little bit, and then zoomed up over this last week. And as I mentioned in the written portion of this post, we definitely had the last 3 days of this week as a very, very strong upward momentum following the FOMC report, as well as some of the statements by Chairman Powell. Okay, so we've got that. We back tested. Now we're back going up. Okay. Now what I like to do is I like to take a look at fibs. Okay, so from this top of this downtrend, where is the fib from that pivot point to that pivot low? And what we see is that we actually have a 61.8% retracement up here. The resistance kind of occurred right around the 50%, so we could almost just extend that rectangle up here and saying that's going to be resistance zone. Okay, so we had a really strong move this past week. Is it going to continue that slope? And usually I don't see that happening. I usually see things happening more at a 45-degree angle, which means that potentially this could come into play. We could slow our momentum up. I'm not necessarily bearish. It possibly could go sideways a little bit. Okay, so let me take that off and let's do a little bit more analysis. Okay, so let's even go back to the pivot high, the real pivot high, the highest of the high. And you can see that pivot high to that pivot low, the fib zone actually is the 50%. Okay, so really it's kind of in there. It kind of fits in that theory as well. And theoretically, if we get past that 50%, we could also go up to this area. So what I want to do is I just want to throw a line on that real quick. And we'll probably take it off here in a second, but let's just kind of put a line where that is right now. I need to make it a little bit more clear. Let's put it right there. Okay. Okay, so I'm going to take that fib down, and so we had it here. Now let's take it from that pivot high down to that pivot low. Okay, so now we're going to come up, and so we get this zone here, really kind of narrowing down. Okay, so now let's do something else. I love fibs. Okay, so let's go the other direction. Now we got a pivot. We got a pivot going on the upward direction. So we've now kind of shifted gears and are heading up. So let's take this from the pivot low and let's see where we bounced. Okay, so we bounced right there. We bounced on the 61.8 or just below it. So you can kind of call that a zone of support. And there's another tool in TradingView I love to take a look at, and it's this right here. Okay, so it's the Fib Extension. Okay, so now we come down to the low point. Okay, and what's very interesting to me here, this is really kind of why I did this analysis, is that if we take the fact that we are now potentially going, reversing course and heading back into an uptrend, and we come up, we came back down, we bounced on the 61.8 or just below it, and we take that and we'd say that we're going to get an extension. Normally, you're going to see a stop at the 100% extension level. And that 100% is this distance here, extended by 100% from the bounce. If it gets past that and confirms, which it has, normally what you're going to see is it go up and extend to 161.8%, which just so happens to be that orange line that we put on here. And it also fits right in the middle of this box. Okay, so I'm not calling a top. I'm not calling a bottom. I'm not saying it's going to reverse. These are things that I'm watching. Earnings season this last week was tough. Okay, we had some wins, we had some losses. It's normal. A few more losses than I normally like, but it's usually the system that I use for the earnings, the historical results, gets a little bit challenged when the market moves too far. And I call it too far, too fast. I believe it's moved a little bit too far, too fast. And we, in all likelihood, are going to see it continue to go up a little bit over the next week, but we could also see a flat move. Okay, so we could see it slow up. So the velocity kind of came up and was really strong, and now let's just say it's gonna flatten out a little bit. Might go up a little bit. I could be wrong as well, but I don't see it really going up much further than this area. We could go flat and we could come down a little bit. Okay, so this is actually an ideal period for me when things go a little bit more flat for these earnings plays. And we are going to have some earnings plays coming up. As usual, this is what I'm focused on with Green Goose Trader, is playing the system of historical earnings and how they work, how IV crushes over earnings and the stocks don't move. And I don't think the stocks that we have targeted for this next week are really going to move that much, and we should be just fine with the volatility crush. As normal, we're going to have our losses, we're going to have our wins. Usually there's a lot more wins, so I'm hopeful that we have more wins this coming week. So the premium subscribers get the list of earnings plays. Otherwise, if you're not a premium, that's fine. Just kind of look at this and say, hey, I either agree with him or not, or he's full of shit. That's fine, okay. So it's just a real quick analysis on the SPY. So hopefully this is useful to you.